Good morning and happy Feel Good Financial Friday. Coming to you live on this 29th day of July 2022, the last business day of this month. And what a month it's been. We're going to get into that in just a bit. A few minutes past 10 a.m. on the East Coast. I am your host, George Kroustalis, and with me as always, my co-host extraordinaire, Kim Lanciel, financial literacy consultant, and real estate development and crypto expert, Sam Castellan. Well, we mentioned last Friday, we may have a little summer rally on our hands here. We bounced back Friday, bounced back week last week. Well, heading into arguably the biggest week of the year from an earnings and data perspective. You had the Fed meeting on Tuesday and Wednesday, decision on Wednesday, obviously. You had what we call in the business the Super Bowl of earnings week. What is the Super Bowl of earnings? Well, it happens 4 times a year, but it's when the top 5 companies in the S&P 500, yes, they are all tech companies, all report in the same week. You had Microsoft and Google report Tuesday. Both missed earnings expectations, but the number wasn't as bad as feared. A lot of negativity in the market going into this. Remember, they rallied, as did the market. A matter of fact, one of the biggest NASDAQ days, up 400 plus points since March of 2020. That was coming off the bottom, the COVID bottom. Meta, disappointed Wednesday, but Fed Chairman Powell was there to give us our 3/4 point interest rate hike and had some, let's call it, somewhat dovish arguments about future hikes. That go up. And last night, Apple and Amazon, the 2 heavyweights, both beat the number, both rise after hours, continuing the momentum this morning. So it was a gangbuster week. And to end up, what I said more on this month later, unless we give a lot back today, this will be the best month for the S&P and the Dow since November of 2020. And that was the Pfizer and the vaccine news. With that, Kim, what do you see out there?
Yeah, so what we're seeing right now is some jobs growth is going on. We were talking about that last week, and I'd actually mentioned in the past, one of the good things that people can do is that, they can go ahead and go and ask for a raise. But it seems like people aren't necessarily going and doing that. And if they have other options, they are job jumping. So this seems to be like one of the largest, numbers of people that they're doing this in the past 2 decades. It's really interesting the reasons why that they're doing it. Is that because they're not getting the pay raises that they're gotten. So, complacency doesn't help at all. People are comfortable in their jobs, they're comfortable in the positions, but people and the workers, they're paying attention to what's going on, and they know that they can do this, and they know that they're in positions to do that. So interesting if you compare it in the to things in the past. And in 2018, 42 million Americans changed jobs. The next year, 42.1 million changed jobs. 2020 was kind of funny and hard to gauge. So then, looking at 2021, you had 47 million people that were changing jobs. So that's quite significant. So, some of them are receiving when they made those job changes, 30% increases in income. So if you compare that to the 6.4%, that's a big, big difference. So you want to make sure that, you're doing it for a good reason, and that, when you do that, you're looking for the people that are doing this out there. They're looking for the life-work balance, more respect in their positions. And it also kind of comes with some risks. So if you look at the recession in 2018 or 2008, people are looking and, we're all asking and wondering, is this really a recession? We don't know. But in 2008, there were a lot of people that were out of work for 2 years. So if you're going to do the job jump, you got to be certain that it's going to be stick.
Night and day, I would say, from 2008 to 2009, writing was on the wall. You had, not only companies, especially financial service firms, and Kim, you knew that, firsthand being in the big cities, but you had banks going out of business. I mean, Lehman in September, Wachovia, Washington Mutual, you name it. I mean, it was just horrific. Very different situation today. Real estate. Sam, we touched on it last week, the fact that how many deals were shelved in the month of June because of these high interest rates. What do you see out there, Sam?
Yeah, we saw the closing on the mortgage market going like below probably 8% month to month actually in June. So we saw like these deals like significantly reducing month to month. But I guess more importantly, George, what we're seeing is like a shift trend change in the market. And so basically what happens is that you saw how the Fed effectively destroyed like the mortgage market with that spike in the rates that we saw in terms of interest rates. And so yet we have like a long-term shortage of housing supply for like many years that the US is suffering. And so when you combine those two factors, what we're really seeing is that the number of people, the number of Americans that are in need of a house, it's higher than ever, yet the supply is still very limited. And so with that, what we're seeing is like, because people cannot afford a house, they cannot afford buying a house because the interest rates are so expensive, the prices are still maintaining to like certain levels from the last 2 years, but yet there's like a significant increase in demand for housing. And this is like really what's changing the market, and it's transitioning the market from a homes buyer market into a renters market. So that's the effect that we're seeing in the economy, where those multifamily units are increasing in value. Like we're seeing like all of these developers going into the market, buying multifamily buildings that are apartment buildings and really investing into that, where we're seeing this trend of people that used to be a home buyer, they're selling their homes, or they wanted to buy a home, they just can't. So now they have to rent. And so basically now we're seeing like all these rental apartment buildings increasing in price significantly, being bought by developers, and people that wanted to buy a home, like now they cannot, not being able to afford it. So we're seeing that shift in the market.
Sure. I mean, that's what happens when the average mortgage payment in this country, I just saw this stat earlier this week, been steady around $1,100 going back to 2017. It is now $1,900 a month. And that has just happened in the last few months, of course. Keep in mind, let's go back for a second. When I mentioned the Fed raised on Wednesday 0.75 percentage point, that is the Fed funds rate. So when you hear that, don't mistake in the fact that mortgage rates went up 0.75 point. The mortgage rate, 30-year fixed mortgage rate anyway, is based on the 10-year Treasury bond, more the 10-year yield. And those rates continue to stay under 3%, which they have been now for about 2 weeks. So it is remained contained. The Fed is getting their wish. And for the first time since we have been in this, melees with, let's call it 2022, with market declines and inflation going up and interest rates going up, for the first time this entire journey, we heard the words, soft landing could be possible. Of course, time will tell. We shall see. However, we still got a few months to go. I can't believe it's going to be August 1st on Monday, but here we are. Last week of July, it's been a great month, and nothing yet on the sports calendar, but that will all be changing in a few weeks as well. But with that, to our many viewers, thank you for joining us. Hope everyone has a fantastic weekend, and we'll see you next Friday when we're taking the show on the road. Adios.